Yeah, let's do it.
Let's get going. Well, hello, good afternoon, good morning, good evening, wherever you are in the world. And welcome to the second of our 3 sessions on the crypto economy. In this session today, Kapil and myself are going to talk to you in particular about some of the core components, particularly the application side of things. And just as an encouragement to you, please do ask questions in the Q&A box, put comments in the chat to discuss with each other. As we're both getting older, we probably can't monitor that in the Q&A box and talk at the same time. But we'll talk for about half an hour, and then between us, and then we'll open it up for discussion. So let's just jump straight in. Last time round, those of you who are with us will recall that we gave an introduction. We talked a bit about what cryptocurrencies were. We talked a bit about the risks. We talked about the kind of applications that were emerging. And in particular, just as a reminder, sort of Bitcoin was the first of the digital currencies. It came to view in 2009 and was really part of this big desire at the time to respond to the global financial crisis and to facilitate a new financial system which only answered to its own code. So Bitcoin has a maximum number of coins that can be issued, which is 21 million, but you can buy them down to 18 decimal places, so 1 quintillionth of a coin. And they wanted to create something that was very participative, very open, very democratic. So it was built on the blockchain, which has the benefits of being secure, immutable, i.e. you can't censor or change it, decentralized and transparent. And we saw a number of copycat coins emerge quite quickly. And then over time, we've seen this evolution into 4 categories. So things that are either transactional, we've seen a number of coins now which are being used and accepted to pay for things. We're seeing travel agents now in the airline industry accepting over 60 coins. The second, and we're seeing government issued central bank digital currencies. We'll come back to that in a second. Then the functional coins, which are really allowing us to do something. And we'll talk more about that. But Miami has its own coin now where it takes a share of the mining fees and raised more than $1 million in the first week and is using that money to fund things like city development. We're seeing the coins that are effectively derivatives of real world assets. So whether it's shares, commodities, something that you can buy into with crypto that mirrors the price of the real world asset. And then things that allow people to facilitate their network. And we're seeing now, stars for media and sport creating their own community tokens. We're seeing businesses creating tokens, and a lot of rumors that Disney is going to create its own cryptocurrency. It already has one, but it's not had massive traction. But there's a view that it might actually build an entire ecosystem around that. One of the most interesting developments is the idea of stablecoins, which are typically tied to physical assets like the US dollar or gold and track the price of the dollar at the moment. And those are used within the crypto economy so that you don't have to keep moving your money in and out, and you can basically buy and sell other currencies with that and earn pretty high rates of interest. At the moment, crypto.com, one of the exchanges, is offering up to 14% interest. This has clearly attracted the attention of the regulators in the US and the big banks who are saying, well, we're losing people's savings, we're losing money from their deposit accounts, and we're having people move away from bond investment into stable coins. And that's not good for us, because if we don't have savings and deposits, then we can't lend and we can't do fractional reserve banking. So at the moment, the US is talking about banning the current stablecoin providers and making it only something that the banks can issue, which is going to be fascinating. Here in the UK, we have a client in financial services. The chair and the vice chair went to a meeting with the regulators. One came away thinking they were being encouraged to create crypto tokens themselves or a stable coin. The other came away thinking that they were being told to stay away. So it's a complex and convoluted world right now, and it's changing fast. We're also seeing countries starting to adopt crypto as legal tender. So September 7th, El Salvador accepted Bitcoin, started accepting Bitcoin as legal tender. It gave everyone in the country $30 in Bitcoin and a wallet to hold them in. The president's been teaching people how to use the wallet. And then we are seeing countries start to launch their own digital currencies. So China has a trial with 20 million users. We've got Ghana about to launch one. And three different ways people are doing that. One is they're creating their own, like China. The second is they're saying, well, we'll be part of an ecosystem like China's or a dollar-based coin. And the third is, well, we'll use one of those stable coins to be our CBDC. The big difference between central bank currencies and cryptocurrencies is that the central bank currencies are not anonymous. You know exactly who owns them. You can monitor their behavior, and you can control the monetary system in a very different way than with crypto, where we can see the money moving around. We can see which accounts have the most money and what they bought, but we don't know who owns it at the end. There are ways of finding out. So there's some differences there. We're also seeing the corporate world really getting involved now. So firstly, VCs, $17 billion of VC investment this year alone into this. We're seeing companies like Bain Capital and Andreessen Horowitz coming in, a vast number of crypto-focused venture funds, a number with more than 100 investments, the biggest being Digital Currency Group, who have something like 200 ventures. And then you're starting to see corporates come in, like MasterCard, UBS, and I can't remember who else it was, but Morgan Stanley. And they jumped in and invested $62 million into one venture alone. We're now seeing MasterCard perhaps doing the game changer, where a few days ago, they announced that every bank on their network, which is about 20,000 banks, and every merchant, which is a couple of million, will be able to accept crypto. So that means that their customers, of which there are 3 billion MasterCard holders, can buy and sell and hold crypto, which takes away all the complexity of using exchanges and DeFi platforms, makes it very easy for anyone to buy crypto. And this could be a game changer. And then what the other big development we're seeing is the crypto firms themselves are launching their own investment funds. The biggest so far is Binance, which is the biggest exchange. About 3 weeks ago, announced that it's setting up $1 billion fund to invest in crypto startups that will then use the Binance Smart Chain platform to facilitate transactions. And when we talk about platforms, what we're really talking about is applications that are built on the blockchain that allow people to do things using what are called smart contracts. So these are fully automated contracts where both parties effectively agree to do something. So I put my money, I stake my money in a decentralized finance platform. I accept the interest rate of, say, 8%, and that's fixed for 30 days. At the end of that 30 days, the money is returned to my account with the interest. I don't have to get involved. There's no human involved. It's a fully automated contract. And we're seeing more and more of these, and a number of platforms emerging to facilitate this. The biggest and most popular right now is Ethereum. It was launched a couple of years after Bitcoin, but now we're seeing a number of others coming through. And a bit like internet exchanges and the different kinds of applications we see on the internet, we're not only going to see one, we're likely to see a number of these emerge in the coming years, and more people building applications on top of this, and then more and more people building services on top of these blockchains, which act as what's called layer 2. And then you can do some of those transactions in those applications and maybe have lower transaction fees, what are called gas fees, and potentially faster ones. So there's applications like Matic starting to do that, and a range of them. In terms of the marketplace, it's very interesting. We're not here as financial advisors. Right now, there's a lot of excitement in the marketplace that we're in a bull run that could last 1 day to 6 months, who knows? And then the expectation is we're going to hit a bear market with potentially an 80 to 90% crash. But what's more important is understanding the fundamentals and the direction of travel. which is why we're seeing so many corporates come in. Most of the investment banks now with $200 million plus stakes, 5 to 10 venture investments in their portfolio. Over 200 listed companies now have cryptos on their balance sheet. The biggest is MicroStrategies with about $3 billion. Tesla has about $1.5 billion. Square has a couple of $100 million. Intel has a stake in Coinbase, which is one of the platforms. So it's all moving, and it's very unlikely that they're going to rein back even if there's a market collapse. We're also seeing the fastest rate of adoption in the world of any technology. There are over 300 million users today. And the expectation is if we carry on even at 75% of that current rate, we'll get to about 1 billion by 2024. So those are some of the fundamentals of where we are. And I want to hand over to Kapil to go a bit deeper into some of those applications and some of the possibilities that are coming up and the ways in which people are using crypto. So Kapil, over to you, sir.
Thanks, Rohit. So I think I want to start, we're talking about the core components of the blockchain technology. So I want to start with what Rohit's already talked about, in that the first generation of the cryptocurrencies and the blockchain that came out was Bitcoin. And there were some other currencies that came out that mimicked Bitcoin, which were really meant to be initially the digital currency. It was like a revolutionary idea of moving away from fiat and moving more into a deflationary digital currency kind of concept. Now, what we're seeing here with smart contracts on this current slide is in around 2014. Whoop, lost the slides, right?
Oh, sorry. Okay, let's get this back up. I'm not sure what happened there. Can you advance again?
I think I need to.
Oh, sorry. Sorry about that.
That's all right. Cool. So the smart contract concept got added in around 2014 with Ethereum as the first application that allowed additional functionality to be added to the blockchain or cryptocurrencies, in addition to it being just a digital currency. And along with that, we saw, which is, you can call it the second generation of blockchain, when the smart contracts were added. Now, with that, I think, can I move this? Yes. The other things that happened, Rohit talked about stablecoins. Now, around 2014 to almost 2017, we saw a lot of volatility in crypto market, in that the price, if you were invested in crypto, there was no real way to manage or convert your investment into any kind of stable currencies like fiat. So the concept of stablecoin was also brought in a way to have a pegged cryptocurrency to fiat currencies like US dollars. So if you want to sell during the volatile times, if you want to sell your cryptocurrencies and back into something that is more stable, you can come out into stable coins. The other thing that happened in sort of Gen 2 was this advent of decentralized autonomous organizations. Now, which is really where we're starting to see from 2017 onwards, and we're still in an emergence of this area where most applications, most projects in crypto world are run by the community themselves. So there are governance tokens that are allocated to people who invest in particular projects, and then you get to have a say in what to do, which direction the project needs to go in, and lots of other things. And within the decentralized organizations, we're starting to see new VC models, for example. So DuckDAO is one of the examples where the community-driven VC fund which is now used for new projects, the introduction of new projects into the market. So we're seeing this evolution, and this is not like the end all of DAO right now. We're seeing an evolution of this. MakerDAO is another one where MakerDAO created a stable coin which is governed by a decentralized organization and the community itself.
So just one point on DAOs that I would just add is, one of the key differences is they literally have no employees. They have no management, they have no buildings. Once the application is built, again, it answers to its own code. The rule set for that application are built into the code, and the community then propose changes and vote on them. But there isn't a CEO, there isn't a management team. So they really are a kind of truly democratized model. And some people are saying, well, you could use similar models for the governance of towns, of communities, even countries, and for the running of things like NGOs. So it's a fascinating concept that obviously is generating a lot of interest, but also a lot of pushback from those who it might challenge in the corporate and governance world. Sorry,
and what we're also seeing is that we haven't seen a DAO model which is straight away a distributed model. What we're seeing so far is that it starts with a core team, and then it evolves into more of a decentralized autonomous organization. Then last year, which is almost, I think we are in the Gen 3, this concept of decentralized finance came in, which is really bringing the concept. So all of the financial instruments that we see in a centralized world that are, run by banks, financial institutions. Now those concepts we're seeing that in a distributed format coming into blockchain and cryptocurrencies. And that has been one of the major changes since 2020, pretty much. And a lot of the value that we are seeing being driven in the cryptocurrency and blockchain world is because of decentralized finance. So as an example, last year when we started, there was about 5 or 6 billion total value locked in the decentralized finance, which is around 200 billion right now and increasing at a very fast rate. So a couple of examples here are decentralized exchanges. So these are exchanges where you can actually buy and sell tokens and cryptocurrencies, which are not controlled by a central organization. It is totally decentralized. And as an investor, you can become a market maker and provide liquidity into the projects. And then as a result of providing liquidity, you just sit back and get returns. And we're seeing smart contracts being used to provide your cryptocurrencies as collateral and borrow money on that basis in a really fast-paced manner and at a very low interest rate. And it is all driven by smart contracts. There's no manual governance needed. It's like, as long as you fulfill the criteria, you can borrow the money. And if you're not able to return the interest rate or pay the interest rate on time, the smart contract executes and your position can be liquidated, for example. So we're seeing that this is one of the most exciting and big areas within the crypto format. With the advent of smart contracts, what we're also seeing is pretty much every industry that is out there, we're seeing the blockchain playing a role. So supply chain, for example, is one of the big ones, and a big project within that is VChain, which is actually being used by some major organizations right now to bring basically transparency into all stages of the supply chain. We're seeing things like file sharing. So how to have file sharing be distributed rather than having Amazon centralized servers doing all of the file sharing. How can it be distributed amongst all the distributed computing system that is out there? So these are some of the areas where we're seeing One big project is AGIX, which is a artificial intelligence, distributed artificial intelligence, where this organization is basically bringing all of the AI projects into one place, but in a distributed format, so that anyone can make use of the new AI concepts that are coming up. Rohit, do you want to add anything to this particular one where your favorite projects are?
Well, something I learned about yesterday was VChain have partnered with some Italian agricultural organizations. So they're now helping 300 Italian agricultural firms track the entire supply chain so they can see the movement of food. And hopefully that will reduce wastage in the supply chain. It will reduce shrinkage, i.e. people stealing it, and they can track every step of the movement. And this, if you scale it up, could help dramatically reduce the 40% of fresh food that's wasted in the world. And if you then look at the 800 to 900 million people who are going hungry, if we can match the two together, the belief is that if we could eliminate food waste, we could also eliminate hunger. So some of these things really have a game-changing potential.
Yeah, that's a great example. And I think one of the main things is also like really from the origin, tracking something so that when you get the end product and it says on the package that it has XYZ as the ingredient, and so you can actually through blockchain really track that that is the truth and not just someone putting a label on. So that's a big part of the supply chain. Now, what we're also seeing is a lot of, this is a new concept this year. It's we call Memecoin, and I think everyone, if you've never heard of anything else, you would have heard of Dogecoin and Shiba Inu coin, which is really, I don't know how to explain it, but these started as a dog meme, as a joke when Bitcoin started. Someone started Dogecoin as a joke, and it has become one of the top 10. Like Shiba Inu and Dogecoins are currently in the top 10 of the overall market cap of the cryptocurrencies. Doge is, I think, worth 40 billion, and Shiba is around 35 to 40 billion dollar market cap as well. And we're seeing this as a really like extremely risky, almost gambling style cryptocurrencies that are coming up, where we see millions, sometimes, you know, in case of SHIB and Doge, even billions of dollars of movement within days. And we're seeing like millionaires being made within a day and losing all of that money within a day as well. So very risky, but there's thousands and thousands of these meme coins coming out at the moment.
On SHIB, just a kind of point on SHIB. If you had invested $1,000 in SHIB at the beginning of this year, you would have around $1 billion today.
You might not be able to cash it all out, but on paper, you will have $1 billion for sure.
You'd have to take it out in very small amounts.
Yeah, because you can move the market. If you take few $1 million out, you can move the entire market, which is great. With that, what we're also seeing is a big drive into decentralized content. And there's a big move, especially what happened, I think, last year and this year around the censorship of the content on YouTube, on Twitter, and also lots of different, on TikTok, we're seeing, on big social media, on Facebook, the censorship and the centralized control of who is allowed to do things and who isn't allowed to do things. So we're seeing that a big move into a decentralized social media, and pretty much all areas within the entertainment industry becoming decentralized. So one of the things is censorship. So you can't censor anything. Everything, as long as it's on blockchain, everything is visible, everything is accessible. So you can't censor anything. And the other thing that we're seeing is, from a creator economy point of view, people who create music videos, so for them to monetize their content without an intermediary. So if you are a content provider, you provide content, video, audio, music, written content, and you can monetize it very easily using these distributed platforms. Like these are all the some of the platforms that we're seeing: AOS, Theta, Audius. Opulus is an interesting one, a new one that's come out, whereby if you are a music, if you're a musician, you can create a non-fungible token, an NFT, of your songs and album, and people can buy that NFT. And if that music, if your album becomes really well known, then anytime you get a royalty, then you get a part of it, and people who are investing in your NFT get part of those funds as well. So some really interesting business cases and use cases coming out in the entertainment. And as I said, I think you probably also have heard of NFTs, which is a non-fungible token, i.e. You can track the ownership of anything that is being created. And so far, we're seeing some mind-blowing numbers. Beeple is one of the first one whose art was auctioned for $69 million. CryptoPunks has become almost like a symbol where if you own a CryptoPunk, then you're part of this elite group of people. Now, if what we're seeing is like this shift from how wealth or how status is being displayed in the social media or digital world. Now, if you have a massive mansion, if you have big cars, nobody knows about that. But if you have a CryptoPunk and you show it as your profile picture on Twitter or any other social media platform, then you are somebody. Like, people know that those are worth millions of dollars. There was a recent sale of a CryptoPunk for, I think, 500 million, $500 million worth of money. I don't know. And this is just the beginning. This is like what we're seeing this year. What we're also seeing is within the NFT space, the collector economy moving into digital. So VV is an app which partners with Marvel, DC, and some of the major brands, where they are converting the collectible, which used to be things like comics, characters. They're converting into a limited number of authenticated digital products, so digital comics, for example. And if you own a really rare comic, for example, one of the first Marvel ones, they are worth $20,000, $30,000, $40,000 within the collector economy space. So this is really exciting. And some of these here are my NFTs. So this frog one here, it's called a frog in disguise, where they're using these NFTs in digital games, and which leads us into the metaverse. You heard Facebook becoming a metaverse company. For people who don't know metaverse as such, I think people are saying that the Facebook is one of the leaders, which is not true. There's already a multi-billion dollar industry that is coming up. So some of the examples are Decentraland is one of the biggest projects where you can buy land, or digital assets, and then you can do things in a virtual world. Or XE Infinity, where there's a big trend where people are leaving their jobs just to play this game and earn enough money that they can pay their bills. And if you're a gamer, it's like, what else do? You become a gamer, go into the blockchain world and make loads of money. Or we're seeing some projects like Blocktopia, where they're creating a virtual building with 26 floors, and each floor will have different functionality. So you could own part of that building, and you can use it for advertisement. You can use it for art gallery. You can use it, one of the places, as a game arcade. So basically, any business can go into the virtual world and create whatever you want to create within that. And what we're seeing is, I'm not sure if anyone here has seen the movie Ready Player One. We're really seeing the first steps of that becoming real, because we're seeing these multiple metaverses coming up, and then a multi-blockchain world that is all interconnected, which is what I see as the generation third, where all of these blockchains are connected to each other, and you can move from one blockchain to the other, either in terms of the functionality or in terms of being in a virtual world and just travel in this multiverse without any issues. And what we're also seeing with that is the third generation of internet, which is distributed. So instead of having ICANN or other companies, centralized companies, sort of holding the space, the data holding, and also the holding of like your domain names, this is all becoming distributed. So very democratic in that way, very revolutionary in how and where we are in this space at the moment. Yeah, that was the last slide.
Excellent. And we're going to open it up to questions, but just to kind of give you a sense here, there are already 3 billion plus gamers in the world. That market, the video gaming market, is worth over $160 billion. And just the online gaming part of that has about 1 billion users and is estimated of being over $20 billion. And some people are saying that actually a big part of the metaverse in the future could be corporate usage. So Microsoft, I think it's called Hatch, has its own metaverse now that you can access via Teams seamlessly, and has hosted over 100 events in there. And they're seeing corporates saying this is the obvious next step from having people on screen to interacting. And so for things like onboarding of employees, you can have a much more interactive way of doing that. They can connect with colleagues, they can meet them, have sidebars, move from group to group, learn about the culture more. So we're really at a very early stage. And the reason people are connecting the two is an awful lot of the players are earning money in the cryptoverse, in the multiverse, or in the multiverses. And that this could be one of those places where you start to trade goods and services using crypto, and crypto gets used to build out these multiverses. So I'm going to just advance this one slide, and then I'm going to stop. Actually, yeah. So just a reminder, obviously we've got our new book out where we talk quite a lot about these things, and about 400 plus technologies that are coming over the next decade or so. And they're available on, well, Amazon and our website. And also we have our newsletter if you're not already receiving it. It is $149, but if you're on this webinar, you can have it for free if you take a copy of the screen, or just remember RT News. Right, let's stop sharing, and let's go to, no, what's going on here? And then let's throw the floor open for questions. We've got our first question here from Mubarak Ali. All right, respected sir, you instantly get a point there for respected sir. I don't know which one you're talking to, but I'm going to say it's Kapil. Thank you for your invaluable insights and extending my sincere thanks to organizers for this opportunity. My question is, what we've learned so far about blockchain for business. Okay, what have we learned so far? 2, what should business leaders know about cryptocurrency? Kapil, do you want to have a first bite of that, and then?
I think you're probably more suited for that one.
All right.
I'll just see if I want to add anything.
What should business leaders? I think what we're seeing is, on the one hand, very excited people. 200 plus companies have crypto on their balance sheet, or 200 plus public companies, thousands of private ones. And people are beginning to say, well, it makes sense for us to put a little bit of crypto on our balance sheet, particularly Bitcoin and Ethereum, because what we see is every year, the lowest price is higher than the previous one. And they are bound to, over a 4-year period, appreciate. Whereas if I just keep my money in the bank, even with overnight rates that I can get on wholesale markets, the value of my money will go down this year because of inflation. And so more and more people are saying, we'll go there. Some are saying that within 5 years, every major public listed company will have a crypto person working in treasury, finding the best rates. I think, so that's one side of it. And then you can get more exotic. You can start to say, okay, what are those applications that we should be using just because they're good for our business, like supply chain or like insurance tools? And I think over time, what we'll see is more and more companies saying, look, we need our data and our applications to be secure, to be immutable, and to be something where we can't be accused of changing it over time, all of which are risks with centralized systems. So we could see a lot of current applications moving over. Then we're going to start to see more corporates saying, actually, let's take a stake in something that could be of value to us. It could be a new business. We're going to see a lot of the financial services companies saying, we'll be your gateway. So already Wells Fargo partnering with one of the decentralized platforms called Aave and saying, we'll be the gateway. So you don't have to know, record your 12 keywords or know how to exchange data in these complex platforms that are designed by techies for techies. We'll do all that for you. They'll obviously take a share of it. So we're seeing a number of ways, and then creating their NFTs. We've just seen McDonald's launching an NFT that they're going to give away. Disney have got a bunch, as Kapil mentioned. More and more companies saying they'll do that. And so there's this whole range of possibilities for corporates. What we find is a lot of people at senior levels in the organization just don't like it. They just don't want to know about it because it's such a threat to the way they think. And my view is that's okay. You don't have to understand this. You don't have to buy in, but equally you can't complain when you see competitors making more money out of their crypto than they do out of their revenues. There was a report earlier this year that said to Apple that if they started to accept crypto and only 5% of their customers converted to purchasing in crypto, and particularly Bitcoin, they would make another $40 billion a year. So there's a thing. Tesla now makes, I think it's as much money through the appreciation of its crypto as it does through the energy credits, which is its other big revenue source. Forget cars and all the rest of it. Where it's making its money is those two channels. So we can see it. We're not trying to persuade any company to go here. We just say, understand it, spend some time learning about it, and gradually decide whether you want to play there or not. We've done this piece of research, which is coming out in a couple of weeks' time. And what we can see is from that, a growing corporate interest in these things. And then I think I've probably answered both. So yeah, but you can't force people, and you just got to let them learn at their own pace. I see it now as being very similar to people's attitudes to the internet when they were saying, well, why would I need to use the internet when I can do this on TV? But you can't. We moved from TV to the internet to social media to these things. And you think about the kinds of things you can do in this world. So one of the metaverses is called Fortnite. You probably will know it. In August, the musician Ariana Grande did a concert with 78 million viewers. There is no other platform in the world that will give you that. So we just have to understand these things and decide if we want to play. And imagine just charging those people $2 to watch the concert. That's probably the most valuable concert ever performed in history. So yeah, I mean, I think it's an interesting and open place. So that was the first question. Do we have any more? Does anyone else have a question? You can put your hand up or you can ask. We've answered that. Any others? Okay, I'm going to ask you. Oh, Kapil, do you have anything to add on that?
I think you covered most of the point. I would say in terms of what business leaders can do, I would say that just start to learn, start like what we're doing here from an information point of view, talking to people, more people like that, reading on things, because we really are, I think, at the beginning of a major tech and financial transformation of like what we see in the world. I think jury's still out, potentially jury's still out, whether, you know, there's still plenty of people saying that it's not going to go anywhere. Having said that, right now, the entire cryptocurrency ecosystem is worth $2.7 trillion. So it is something. And whether it becomes the next, you know, digital gold, it becomes something else. I think we're already seeing a major change. So for business leaders to just start to learn about what's happening in this space and how it could be relevant from a tech point of view, from a functionality point of view, and from a financial asset point of view within the businesses would be the way to think about it.
Okay, so the next couple, we got Kemi in the chat saying, thank you for this and this great English language presentation of the content. Yeah, that's our goal. Can you get access? Yes, if you go to our website in the events section, you'll see the video for the previous event. Thanks for the opportunity. Happy Diwali. Great, thank you. And also curious about how much you have invested in crypto, but guessing that is private. That is a very accurate guess. We're not here to give financial advice, and anything we say about our personal holdings, I think, would be inappropriate, other than to say we do have personal holdings. We have got burnt in playing with some of the so-called shitcoins, but also made some money. You take a very portfolio approach. And we've just been having fun. We started kind of getting very active in this stuff at the beginning of the year, and it's been so much fun, like learning about it differently. I've been talking about crypto since Bitcoin was launched, but my engagement with it has really grown since we started investing, and I've gone deeper and deeper. And I still, you know, every day I hear about things that just blow my mind, particularly the kinds of things that are being done with metaverses and NFTs, and incredible kind of ways that people are combining NFTs to create new content. There is also, you know, there's still risks. It's an unregulated market. Crypto is about 8 times more volatile than equities. There are still concerns about the energy demands of things like Bitcoin, where you have multiple miners trying to validate or solve a problem so they can validate and record the transactions. So you have thousands of them competing. So they use a lot of energy. But on the other hand, a lot of them are using renewables, and a lot of them are using so-called waste energy, because when you generate it, you either use it or you lose it, unless you've got storage facilities, which a lot of places don't. And then, you know, there's also 2 things that go on. There's the pump and dump, which often happens when people create a venture, and at the start they try and pump up the price so that the founders and their friends can make as much money as possible, and then the price drops a fair amount, but they still carry on with the venture. And then there are the rug pulls, and the rug pulls are perhaps the most fascinating ones. So many of you might have seen a series called Squid Game, a Korean TV series. And somebody launched a coin last week called Squid Game. Nothing to do with the TV series. I think the launch price was about 1 cent. Within a day, I think it had gone up 300,000%. And so it was theoretically worth over $2 trillion as a market cap. But people couldn't sell, and the price literally crashed completely. And the founders never built anything. They ran off with $3 million. So there's all this stuff happens as well. And there are still, you know, the dark side elements of this, where people are still using it for money laundering, drug dealing, contract killings, and all that kind of stuff. But that's becoming a smaller part of the economy, because the largest part of the crypto economy is just being held by people. Over 70% of Bitcoin and something close to that in Ethereum are just held, and they're not moving because people are just wanting the prices to go up. So it's a fascinating space. Anyone else got a comment or a question? Oh, we got a question. Excellent, excellent. Raoul Paul mentioned about network connection business models with reference to crypto. Can you elaborate more on this? Okay, I'm going to give you this one, Kapil. Talk about Metcalfe's law.
I don't know what that is,
Oh,
but I'm
it's
assuming
the size of your network, the value of your network
right,
grows as the size of your network grows.
right. So I think I was assuming it's to do with the community aspect of it. So the one of the things that we see in crypto is very much a community-based model. There's most of the people I have conversed with, there's almost like this revolutionary aspect of crypto. It's like, oh, we're moving away from fiat currency, centralized way of running things. And there's this ideology behind which people are kind of like, oh yeah, we're just like creating this thing. So there's a community, a big community piece within the blockchain and cryptocurrency space. And within individual projects, what we've seen is, again, like any other organization, but more so in the crypto space, is that there are people who go in just to make money and use it as a transaction-based thing. However, there's a big amount of people who go in who like a particular project, and even if it's like NFT, you can really look at it from a creative economy from a point of view, or when we're talking about decentralized finance, people who are like real finance geeks, who want to challenge and really look at what is possible in that space. And these communities get formed within that space, and then the interconnection of communities and ideas that happen, that really drive the value. One of the examples I can give you, let's say from an NFT space, someone creates 10,000 JPEGs. Now, within the community that owns all of these JPEGs, if nobody is selling it, nobody is selling those JPEGs, it suddenly starts to raise the base value of that JPEG. And so community like really creates it. And within the concept of decentralized autonomous organization, if you bring that concept even in a small NFT project, then community is making the decisions in terms of the direction that project needs to go. And when community is involved, when people are involved in the decision-making process, they are sort of involved in the future of it. So we're seeing that, and that drives value, is what I see. Rohit, you want to add anything?
No, I think, and the thing is that these communities grow at speed, which is one of the reasons why Binance has invested, because it's saying with its $1 billion fund, it can bring lots of ventures onto its platform and give them access to its millions of users. Crypto.com has a $200 million fund. And there again, one of the selling points for them is use our platform, and we can give you access to 10 million users. And what you see is that these platforms tend to tell people in advance that they're bringing a coin onto the platform. Some of the most exciting stuff right now is people creating really valuable functionality that just adds value to business. So there are programming languages being used to create Bitcoin blockchain applications, but the bulk of code in the world is written by people not using crypto and not working in blockchain, but they want to take their applications over. So there's a platform, Cartesi, which allows developers from the real world to translate their applications and their code into stuff that will run on blockchain. And that's one of those things where you can just see immense value in it. And I think we'll see more and more of that kind of thing happening. We have another question. Yay! Kotsai, with the recently ended COP26, hasn't ended, it's just all the bigwigs have gone and now people are going to argue for 2 weeks. Have you seen any climate response crypto projects which ordinary citizens could consider using to accelerate climate region response effects? The aim being to bypass the current non-committal national government-based talk shops. Great question. Kapil, have you seen any in that space?
I have come across quite a few projects. I can't think of the project names right at the top of my head, but there was one project I came across that was directly linked to a carbon footprint, and actually working with companies, different companies, and using crypto to reduce the carbon footprint and actually incentivizing organizations for that. I've also come across some projects that are some of the meme coin projects that have recently I've seen, who are donating part of the profits to climate, like sea cleanup companies. So it's like you, within the projects that you raise certain funds, and part of the transaction fee, every transaction fee goes to a pool that gets donated to projects like that. One of the things that I see within the crypto platform is there's a huge sort of thinking behind mental health and well-being, which is kind of weird because it's also a 24/7 kind of market as well. However, people do seem to be switched on about environment, about mental health and well-being, and mindfulness generally. And so I do continuously see new projects coming out that are adding to that space. Those are the couple of examples that I can think of top of my head.
Yeah, so the VChain example I mentioned earlier, if you can track food, you can eliminate a lot of waste, and therefore there's a sustainability angle to that. You maybe produce less food, you produce less. There's a lot of projects going on around measuring natural capital. So we have these carbon offsets, we have these markets in carbon offsets. But the problem is that there's a bit of a gap between me buying carbon credits and actually, is there a project somewhere in the world that is acting as a sink for that carbon? We used to think it was the rainforests, but now the Amazon actually emits more carbon than it absorbs. So there's a lot of projects trying to track that, putting sensors on trees, doing all sorts of things in the environment to track emissions, to track absorption, and then be able to provide a true measure of what the footprint is. There's a lot going on in energy to monitor energy supply chains as well, to watch for loss, to look at consumption patterns, to look at when it's being used in the day. Can we get smarter in that to reduce the energy footprint? There's a lot going on around renewables and measuring the effectiveness and efficiency of those. The people are starting to use it in environmental husbandry, animal husbandry. So can you track your farm animals? Can you see how much methane your cows are producing? And then can you change the feedstuffs and things so that you change that? And then with things like shipping, there's a lot of blockchain applications coming in to track shipping containers moving around. Because one of the big things is you ship the goods from wherever, the containers go full. At the other end, you don't necessarily fill them again, so you ship them back empty. So can we start to do smarter things around the way we use shipping containers differently, the way we can potentially use them as things like pop-up shops until there's enough demand for them to put them back on a ship. So again, tracking all of these things, there's a lot of very early stage projects in the field, a lot of really interesting stuff going on. But I can't remember most of the names. The one I can remember is EarthBuy, who are in the bioplastic sector. And theirs is designed to be a truly sustainable process. And so you can track it at every stage. So they track every stage of their production process using blockchain. So you can see everything that's going on and have full visibility of it, including their footprint, not just emissions, but their energy footprint, their waste footprint, their water consumption. You can see all of those things. And I think we'll start to see more and more of those things and the validation of them using blockchain because it's so transparent. Do we have any more questions or comments?
I would just
Phil?
add to Rohit what you just said. I think the way to look at it is how data, the distributed data modeling and AI, uh, and how they're being used within the blockchain space, um, are actually, I think, allowing a lot of these sort of um, new projects, like the environmental projects, to be monitored better, or like they're providing the capability to do more things within that. Because when we are in a centralized model, I think it's the limit. There are limitations as to what is possible, but the new tech that's coming up, which is distributed in terms of AI and data storage and data querying capabilities, that are, I think, going to allow a lot more that can be done within the environmental space.
Yeah, I think there's a really interesting coming together of the Internet of Things, providing the sensors out there, tracking everything that's generating the data, the big data tools that are holding it, the AI applications that then manipulate it, interpret it, create value, and blockchain as the platform through which you manage the distribution and the transparency and all of those kinds of things. So when you see those coming together, I think you see an incredible wave of innovation over the next 4 or 5 years. And you're seeing a lot of patents in that area from the likes of IBM and Microsoft. Just as an aside, it's interesting how many patents these people are creating, not just for blockchain, but for crypto, and for industry patents. Just in financial services alone, Microsoft and IBM both have more patents than any financial institution. So you're seeing the tech players in particular really seeing the play out there. We have about 2 minutes left, so I'm going to hand over to you, Kapil. Do you have a final minute of thoughts you want people to go away with, other than a recommendation of what to buy?
I think for me personally, someone who has spent a lot of time in tech and business, and then last 7-8 years in a very sort of personal growth and mindfulness kind of area, I just find blockchain and cryptocurrency industry very revolutionary from an ideology point of view, but also from a tech and an understanding of the finances. It's almost like bringing something that was reserved for particular people to the masses. It really feels like a democratization of something. Whether we will get to utopia, I don't know. It feels really exciting, and as someone who loves learning new things, it has been an amazing journey for me so far and continues to be. So I think what I would just say is part of it is immersing yourself into the industry by, what Rohit and I have done, maybe like putting some money that you're willing to lose, even if it's like $50, $100, and then just seeing how it evolves. We'll get to learn a lot by just being in the environment. Is something that I have done, Rohit has done, and I would probably recommend people, but only invest money, or time and everything. Knowledge is always good, but only invest money that you're willing to lose. You might not lose it, but if you go in with that idea just to learn what's there, by putting your skin in the game helps.
Yeah, clearly neither of us are crypto billionaires, or we wouldn't be
not yet.
we wouldn't be running a webinar. I agree with everything Kapil just said. I mean, the three things I would say: one is education, education, education. The only way you overcome people's objections is not by pleading with them; it's by getting them to do some learning and understand. The second is crypto is introducing some new concepts, or giving visibility to ideas that I think are just almost shocking to organizations. Most of the more valid enterprises in the crypto space start with a white paper or a light paper that explains their business model, that explains the economic model behind their business. Show me where that is for most publicly listed companies. They have a business plan. They don't show you. They have their annual report, which tells you nothing, and whatever's on their website, but they don't tell you the fundamental underlying thing. And then the other one that I love is this idea of the Ask Me Any sessions. If you go or Ask Me Anything sessions, if you go onto Telegram or Discord, you will see the founding team of ventures go in there and their community can literally ask them anything. Can you imagine the CEOs of Fortune 500 companies presenting themselves every week for their shareholders and customers to ask questions? And then the third one is, I think, some of the kind of functional concepts that are coming through are really mind-blowing. So the idea of tokenization. We're very comfortable now in the crypto world with breaking something down to 1/10,000th of a cent in price. Why can't we do that in the physical world? We're starting to see people saying, well, can I tokenize a house? Can I turn £100,000 house into $10 million, 10 million tokens of 1 cent each, and then start to let all sorts of people participate? So we're seeing some really interesting ideas seep through. And even if 99% of crypto ventures disappear, the ideas won't. So thank you all for joining. Apologies, we've gone 3 minutes over, but some of you stayed, so hopefully you found that interesting. We are going to do another webinar, I think, in about 2 weeks' time, where we're going to share the results of that study we've been doing on the future of crypto. And then we're probably going to do a few more. It just struck me that we should probably do one on tokenization to explain what it is. And I think we'll probably do a deeper dive into the metaverse. If there are topics you want us to cover and explain in the same kind of way, more than happy to do that and have these kinds of conversations. So thank you all for coming. I hope it's been fun. I hope it's made sense. Thank you, Kapil, for joining the session today, and go off and make loads of money. No, we can't say that. Go and investigate. Go and investigate. All right. Thanks a lot.
Thank you.
Bye now. Stop the recording.